served as President Obama's energy secretary, and Kip Thorne, a leading expert on general relativity who consulted on the movie Interstellar. In their letter, the scientists write, "At no time in our nation's history has there been a greater need for our leaders to appreciate the value of science in formulating public policy." Nathan Hager, Bloomberg Radio.
Well, the science is telling Germany Russian opposition leader Alexei Navalny was poisoned by a Novichok nerve agent. And the revelation dramatically escalates tensions with the Kremlin. The findings by a special German armed forces laboratory ratchet up a standoff between EU nations led by Germany and President Vladimir Putin. Navalny has been receiving treatment in a Berlin hospital where he's been in an induced coma since being flown to Germany on August 22nd. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Well, this is one of these stories that tends to shoot to the top of the most read on Bloomberg. Alex Steele. It's about Bridgewater. Excuse me. Heard of them. Risk parity. This trade, a $400 billion quant trade. I'm trying to get my head around this. I'm guessing you understand it better than I do.
Well, just that the traditional risk parity trade is basically that you're betting on lower volatility securities, and that typically means that you have a heavier bet into sovereign debt like treasuries. What Bridgewater is doing now, led by Bob Prince, and this is in a letter that he supposedly sent out in a July report, he basically says that interest rates near zero mean that bonds can provide neither returns nor risk reductions. So they're looking into different parts of the credit market to provide that lower volatility return. That's definitely not what the purists think, but it does show that if you have central banks artificially suppressing yields, that this is the result. You have to figure out how else to either make your return and mitigate risk.
Yeah, I mean, that was not understanding it nearly as well as you do and the nuances of it. I mean, what I took away from this is a possibly unintended consequence of, as I was talking about with an investor earlier today, Jay Powell sort of sitting on everybody's shoulder, right? And and sort of coming to the rescue in many cases by many accounts, a great way, but it has distorted the market, right?
Yeah, that's why they call it financial repression. I mean, that's why you can see a recovery, and that's why you can see that maybe in some of the economic data, but you're not going to see that reflected, say, in the bond market with a massively steeper curve and massively higher bond yields because the Fed's going to sit on it. And as we learned last week, they're going to sit on it for a long time.
Yeah, no, I think it's a fascinating thing that sort of economic historians will be wrestling with for some time to come, sort of what that rescue did from the monetary policy side.
I can't wait for my daughter to learn about this in like 10, 15 years in school.
I think like 5 years. Your daughter's a genius.
True story. She also hates me.
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleto. Move higher for the U.S. stock market as the relentless rally in risk assets continues. Dollar rose the most in 2 weeks. Euro slid further below $1.20, a level it breached for the first time in more than 2 years yesterday. Oil slumping along with precious metals. Here's where we stand right now. Let's begin with crude. West Texas Intermediate down 3.3%, 41.35 a barrel. Gold down 1.5%, 19.41 the ounce. The 10-year up 6.30 seconds. The yield there 0.64%. We've got NASDAQ at a record at 12,030, up 90 points now, a gain of about 0.8%. The S&P 500 index also pushing higher to a record. It is up 42 points, up 1.2%. The Dow is now rallying 328 points, up 1.1%. Stocks at or near session highs. Again, recapping a rally underway on this Wednesday. S&P up 42, up 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, excuse me. Goodness.
You're right there?
I am. Just a little bit of a cough.
Choked up.
Lingering cough. Just getting all choked up. Because I'm excited to talk to Sean Donnan. Love him. He hasn't been on the show in a minute. As the kids say, senior trade and globalization reporter for Bloomberg. A terrific story in this week's magazine. Rust Belt towns' loyalties divide as Pennsylvania turns purple. He joins us on the phone. And we're also joined, as we are most days, by Joel Weber, the editor of Bloomberg Business Week. He joins us from Massachusetts. Joel, tee this up. This is, I dare say, a Sean Donnan special in many ways, like taking us to where the action's happening.
So this week is our special election issue, and the framing that we use for this, we do it every 4 years, is not to talk about the candidates and the horse race, but to put the lens on America and focus on the electorate. And as we sort of were talking to various people in the newsroom, Sean was like, by the way, I've been going to Western Pennsylvania to a town called Ambridge, and you should definitely know about Ambridge. And that caught my attention. Sean, why? What's happening in Ambridge?
Well, it started off in the spring when we started getting the lockdown with coronavirus, and I just really wanted to find one place in America that I wanted to track through this crisis. And the place I settled on for a number of reasons, including the fact it's sitting in a pretty crucial part of Pennsylvania politically, was Ambridge. It has this astonishing history going back to the 19th century when it was actually called Economy, Pennsylvania. And it was the home of a religious sect called the Harmonists, who had a whole ethos of communal living and ended up actually setting up a huge business empire and selling the town to the American Bridge Company in the early 20th century. And the American Bridge Company renamed Ambridge after itself and brought the steel industry to town. And you had the whole ride through the 20th century of the steel industry, which ends in the 80s when American Bridge moves out of town, other steel mills shut down, and we have the last 30 or so years, or 30 plus years of a kind of that deindustrialized America experience that we all became so familiar with in 2016. And then there was this one added wrinkle that I just couldn't get out of my head, which is Ambridge didn't go with the flow in 2016. It's a former steel town, and it actually voted for Hillary Clinton. And so it goes against the political cliche, if you will, of these deindustrialized towns. And so I wanted to find out why. I wanted to find out how this town was getting battered by the health crisis and the economic crisis. And I wanted to try and ask a question, which was, after 4 years of Donald Trump, do we know what the future is for these places that he really made so many big economic promises to?
So what was your answer that you found in this?
Well, the answer you find in a lot of places is that it's damn complicated.
Exactly.
Right? And the answer is it's a town that is still caught between two different identities. There's a big chunk of people in town who really are hanging on to the industrial past. But what we've seen this year is the kind of last major industrial employers are shutting down, partly as a result of the coronavirus downturn. And things aren't looking good on the industrial front. And on the other side is this idea that Ambridge, which is 25 minutes from downtown Pittsburgh, maybe can reinvent itself as a bedroom community. And there's all sorts of challenges with that. The school system isn't as good as it should be. The property mix is, it's an old factory town. There's a lot of old factory houses that aren't necessarily going to attract a young family today. And you've got a main street, Merchant Street, it's called, which is still just dominated by vacant buildings. In fact, it's cheaper today to rent a storefront on Merchant Street in Ambridge to store your excess stuff than it is to rent a storage unit on the outskirts of town, which is kind of a damning economic statistic. So we don't know what the future is for a place like that, but we do know that the easy answers and the promises that Donald Trump made in 2016, that he was going to bring the steel mills back, that he was going to reinvigorate these places, haven't necessarily come true, and that's been exposed by the pandemic.
So Sean, let's zoom out here just a little bit, because the real significance here is Pennsylvania, right? And so how does Ambridge and Beaver County, which Ambridge sits in, play into the larger role that the state might play in the election?
Sure. So Beaver County is hugely important. Ambridge was a blue dot in a red county in 2016. In 2016, Trump wins Beaver County by about 15,000 votes. That's about a third of his margin in Pennsylvania overall, which he won by just under 45,000 votes. And this time around, he really needs to hold that margin in Beaver County, even build on it, to hold Pennsylvania again. And at the same time, it's a place that is, in Ambridge, this is true of Ambridge, which voted for Hillary Clinton, as it is in broader Beaver County, that's still incredibly socially conservative, that has an older population, largely white population. And they see stuff happening in America that Donald Trump is pointing out to them, and is now running on this whole law and order message, this whole pointing to the protests, the violent protests in Portland, and some of the violent protests that we've seen in Kenosha, Wisconsin, in the past week or so. And he's saying, be warned, America. And that message resonates. And I was hearing that. I was hearing local Democrats, a guy in particular, Mike McCulloch, who's the council president there in Ambridge and the chair of the local Democratic Party, who was really worried as far back as June that Joe Biden and the Democrats were going to lose voters in this really important part of Pennsylvania because of the law and order message that Trump was putting out there, and because the message that a lot of progressive Democrats were pushing on defunding the police was alienating to a lot of these centrist Democrats. The net result is we've seen that has come true, unfortunately for the Democrats and for Joe Biden. We have seen Biden's lead overall in Pennsylvania evaporate from 10 or more points in July to as little as 1 to 3 points, according to a Monmouth University poll that's out today.
Yeah, it is all coming down to the wire, that is for sure, and it's going to be decided in places just like you write about. It's part of a special issue all about the election, all about the electorate, as Joel Weber, who joined us from Massachusetts, pointed out. He's the editor of Bloomberg Business Week. The writer, Sean Donnan, senior trade and globalization reporter for Bloomberg, joining us on the phone. Well, for those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening to Bloomberg 1061 in Boston, Bay State Business, that is coming up next. Here with me and Alex Steele, we're going to talk about the world of economics from sort of a micro level, talk about the food banks across the United States. Some disturbing data coming out. We're going to check in with Katerina Saraiva in Houston. That's coming up next as we get into the second hour of Bloomberg Business Week. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, September 2nd. The Dow, the S&P, NASDAQ, all advancing. S&P and NASDAQ trading at records. The relentless rally in risk assets continues with a twist as tech shares underperform. Here's where we stand. S&P 500 index up another 42 points, up 1.2% at 3569. Dow Industrials back above 29,000, 29,003, up 357 points right now. That is a gain of 1.25%. The Dow so far this year up 1.6%. To put that in context, the S&P is up 10.5%, while NASDAQ is surging 34% in the year-to-date column. 10-year up 5/32 with a yield of 0.65%. Gold down 1.5%, 19.41 the ounce, and West Texas Intermediate crude down 3.3%, 41.34 for a barrel of West Texas Intermediate crude. Among the day's economic data points, we did get the Beige Book report today, its latest economic survey. Amid signs the recovery is leveling off. And with that story, here's Bloomberg's Vinny Del Giudice.
The Fed says the theme of the latest Beige Book is uncertainty and volatility, with the economy making some gains but performing below pre-pandemic levels. Home building, the report says, is a bright spot. Commercial construction, not so. Employment growth is uneven, and low crop prices are hurting farmers. Vinny Del Giudice, Bloomberg Radio.
Two canaries in the coal mine for the U.S. consumer, retail, and travel. United Airlines Holdings is going to eliminate 16,000 jobs next month as the carrier shrinks operations in response to the steep decline for air travel demand amid the COVID-19 pandemic. Checking shares of UAL, they are higher today by 1.8%. Rival American up 0.7%. Delta up 0.9%. Southwest up now by 2.6%. Speaking of retail, investors searching for any hints that a retail recovery is underway got a glimmer of hope this morning from Macy's as it reported earnings. Macy's shares, they're higher now by 0.3%. Again, recapping here, equities higher, S&P up 42, up 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Well, as Charlie said, welcome back to Bloomberg Business Week. We're going to talk a little bit about the retail landscape coming up a little bit later this hour. A glimmer of hope there, but not a lot of hope if you are looking at what's happening in America's food banks. This is a story that is a must-read, but troubling to say the least. It's part of a special series that Bloomberg News is doing on food. Happy to have with us, back with us, one of our top economic reporters, someone who really distills down the key economic issues of the day. One of our go-tos, Katerina Saraiva, Federal Reserve and economics reporter, on the phone from Houston. I have to say, Katerina, this story, and it pairs with, I think, something that we've all seen, pictures and video of what's going on at food banks across the country, being overwhelmed. What's going on? What did you find?
Yeah, exactly. It's kind of it's a heartbreaking story, really. But yeah, I mean, this pandemic, as it rages on, it's really laid bare this problem of food insecurity, which already was an issue in the U.S., even though it is the world's richest country, as we know. But really, right now, it's coming to a head, especially with the extra unemployment benefits having, mostly expired. People are really struggling as they are either without work or have had their hours reduced or struggling with a rising food inflation, which of course is an issue. So about 1/10 of Americans right now are unable to get the food they need.
And what I think is terribly interesting in this, and the Journal actually had a headline out today in one of their articles that was like, it depends who you ask. Like, some are getting richer, and then some are going to food banks. And that sort of distinction between the two. What's also interesting is those that have been in the middle that this pandemic has put over to the other side. Like, people who would never have thought they'd have to go to a food bank to get food are now find themselves online.
Yeah, absolutely. And I think you see that, I went to a few food bank distributions in Minnesota for this story. And, it was really stark at one of them. And they're doing a lot of like drive-through ones now because of COVID. And at one of them, I mean, you see cars that, are fairly nice looking family cars, I mean, maybe, not the first thing you associate with people that are really struggling to meet this basic need, but it just goes to show that it's really impacting a wide variety of Americans right now. And it has tipped a lot of those folks that are kind of that were in the middle into a place of really struggling to meet this need.
Katerina, one of the things you do really well in this story, and I think it's such an important piece of this, is to talk about the disconnect and the cognitive dissonance between these lines that we're seeing and this huge need, people being tipped, as you say, into food insecurity at a time when we also see pictures and read about farmers dumping milk and plowing over excess crops. Help us sort of synthesize that.
Yeah. I mean, that's really an issue, as one food bank executive put it to me, of food connectivity in the system. So what you have is a lot of farms and, these big kind of big corporations in farming are used to selling mostly to restaurants, right? These big buyers that often work with middleman companies to buy that product from farms. And that, of course, as we know, has massively declined right now. But the infrastructure just isn't there to get it to people in need. So, usually the consumer goes to a grocery store to get food. But if you all of a sudden can't afford that, then you need to go to somewhere like a food bank. So that's where you get these images of kind of what's happening on farms where they all of a sudden don't have a market for their product, yet we know that there are a ton of Americans that need it, but it's just this kind of supply chain issue where they're unable to get it from one to the other. I will say that the USDA has set up a program that the food banks around the country are using where the USDA buys directly from farmers to kind of ease some of this surplus that they're having, and then that food is given directly to people via the food banking system. So that is kind of a positive in this.
In your work, are there certain states that are worse off?
Yeah, so food insecurity it usually is worse in the Southeast. I think Mississippi tends to be the state where you see the highest rates. Again, a poor state in many circumstances. Of course, this is also felt along racial lines, and Mississippi has a high percentage of Black Americans. So, that's another reason why you see high rates of food insecurity there. Minnesota, for example, it is usually one of the least food insecure states. But right now they're looking at 1 in 8 Minnesotans, having trouble getting the food they need.
Well, it's a really great piece of reporting, as you said, very rightly, Katerina. It's a heartbreaking one, and especially when you see these inconsistencies and, as I said, sort of the cognitive dissonance of trying to understand why this is happening in the wealthiest country in the world. Check it out. It's part of a special series that Bloomberg News is doing on food, American food banks being overwhelmed by the worst crisis ever. The reporter, Katerina Saraiva, Federal Reserve and economics reporter, joining us on the phone from Houston. And Alex, as business journalists, we understand this, but the human side of it is really difficult, so difficult.
Yeah, it is. And, talking about being a business journalist is that you put it together with, say, the Fed. Mm-hmm. Okay, keeping rates low, how is that going to help these people who are on a line for food?
Yeah.
And maybe it does. I just don't know what that is, because that's the problem, right? In that the other part of the population is just getting richer. So how does it work?
And can the government, is there a feasible and effective way for the government to step in? And Katerina talked about the FDA being able to do that, and that's certainly an important step. But is there something, at federal, state, local level that can bridge this gap and connect all this up? Because it's really, it's tough to see, that's for sure. All right, you're listening to Bloomberg Business Week. Let's get down to Washington now. And Nancy Lyons. Hey, Nancy.
Hey, Jason. President Trump is in Wilmington, North Carolina to commemorate the 75th anniversary of the end of World War II. He's also bestowing an honor on the city for its contributions in the war.
It is my tremendous honor to officially designate Wilmington, North Carolina as our nation's very first World War II heritage city. That's a big deal. Our nation's very first. Wilmington, congratulations to you all.
Trump's Democratic rival Joe Biden is in Wilmington, Delaware, and is criticizing the president for his travels and his failure to model appropriate behavior.
A president has the responsibility to set examples, set the right example for how to get out. Not go out and not wear a mask and not to have large crowds of people standing next to one another not wearing masks.
Biden says he's consulting with health experts before he heads out tomorrow to Kenosha, Wisconsin, to promote healing amid the unrest over the police shooting of Jacob Blake. The nation's top infectious disease expert, Dr. Anthony Fauci, is sounding hopeful about a vaccine for the coronavirus. He spoke today on NBC.
I believe that by the time we get to the end of this calendar year, that we will feel comfortable that we do have a safe and effective vaccine.
The New York Times is reporting the CDC is telling states to prepare for a vaccine by early November, raising concerns over politicized timing. German Chancellor Angela Merkel calls it attempted murder, and she's now seeking answers from Russia after tests conclusively show that Russian opposition leader Alexei Navalny was poisoned with the Soviet nerve agent Novichok. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much, Nancy. Well, you thought Varsity Blues was over in terms of people getting accused of bribing their kids' way into college. It's not. People are still getting in trouble for that, and it is one of the most read stories on the Bloomberg. Alex Steele, a Palm Beach dad. We are talking about Amin Khoury. He is accused of being the 40th parent charged in this admissions scandal, bribing his kid's way into, and I hate to see it, Georgetown.
So apparently he paid, back in 2014, he paid about $200,000 to the then head coach of men and women's tennis at Georgetown. This is according to prosecutors. And also I should point out that he donated $50 million to Northeastern University, which renamed its computer science college after him. I'm just saying.
Yeah, I mean,
you know, you spread the wealth in that sense.
Right. I have to say, I was reading something, not to take the focus off of this story because it's about Georgetown, but I was reading something about the donations that the current Postmaster General, who has come under a lot of scrutiny, Louis DeJoy, that he made to Duke University, and lo and behold, he makes these donations to the athletic department, and his son gets a spot on the tennis team. Totally above board, totally legal to do. And I'm not saying that what Mr. Khoury did here was legal, but you see the defense that people will be like, hey, just making a donation here.
Yeah. It's like, where's the line? So anecdotally, I went to a private school in Manhattan. I know some parents who are trying to get their kids into private school. And on some applications, there literally is a question, how much are you willing to donate to the school per year?
Yeah.
So like, what's the line we draw on this?
So if I write the check directly to the university versus writing a check to the coach, like, I mean, you can see the, like, again, not endorsing this in any way, but you can see what the defense is in some cases. So Varsity Blues, it is rocking on. Here we go. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks continue to push higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid again today, with NASDAQ shrugging off some early morning weakness. Dow's currently up 400 points. S&P's gained 49. NASDAQ climbs by 110. The U.S. 10 yield now at 0.65%. WTI crude futures are down 3.3%. Gold is dropping 30, and transports gain 124 points. Leaders to the upside in the Dow: Coca-Cola, IBM, and Intel, while only Apple, Walmart, and Salesforce fell. In other news, Airbnb is said to have rebuffed an approach from Bill Ackman's SPAC, and after earnings, Brown-Forman rose 11% to a record. In deal news, Blackstone and GIP made a takeover bid for Kansas City Southern. Shares have spiked 6% intraday. And wrapping things up, CrowdStrike reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Mr. Maloney. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK, on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's talk a little retail, if we can. We heard Charlie talk about Macy's, and a little hint of optimism there, I guess, although retail seems still pretty ugly. Alex Steele. Let's check in with Poonam Goyal, Senior U.S. Retail Analyst for Bloomberg Intelligence. So, Poonam, what did you hear from Macy's? What does it tell us about that company? What does it tell us about the retail scene overall?
Sure. So I think, Macy's has shown us, is along with other retailers that have reported thus far, is that as stores reopened, there was demand, and people did rush back to stores to try to get things. They continued to shop online, which was encouraging, but the online penetration rates should moderate as we go into 2H with stores now mostly reopened. Inventory levels were very lean, and not just for Macy's, but really a lot of retail, which is encouraging and just bodes well for them to be able to chase into new demand and also for their margins.
So what's the right question to be asking retailers right now? I feel like I talk to a lot of retail CEOs that tend to have the same questions, like, what's your brick and mortar footprint like? What about inventories? What's demand like? What do we really need to find out to know who's going to go bankrupt next and who can survive, like a Macy's?
I think it goes back to, are you a retailer that people will want to shop in the future? And if you are, in what form and shape? So yes, that goes back to brick and mortar versus digital. But also, if you think about a department store, are department stores where people really want to shop? And if they are, is it across 1,000 malls, or is it across 200 malls in the U.S. with the rest fulfilled by digital? And then the other thing, I'd want to know is just product, right? So when you think about apparel retailers, it's all about product. So if you get the product right, you'll make the sale. If you get the product wrong, you won't be able to make the sale. So how do you get the product right? And that really goes back to lead times. And lead times are important because the sooner you can get the product from when you know what the demand is, the better your product will be and the better your margins will be.
And I want to go back to something you said, Poonam, about, the number of malls and the number of locations and things like that. What do we know about the mall at this point, which is a very social activity? We also know how critical Macy's are as anchor tenants, and we've heard, I remember a conversation Carol and I had a couple years ago, feels like 150 years ago, with Jeff Gannett, the CEO of Macy's, and David Simon over at Simon Property Group. They were they had a whole plan to do this pre-pandemic to kind of revive the mall as an experiential type of destination. Does any of that hold in a pandemic and even a post-pandemic world?
In a pandemic world, it kind of all goes on hold, right? Because people aren't going to stores as much. And while experiences matter, they matter less as people are just more worried about keeping themselves safe. But I'd say what you're talking about refers to their growth stores, right? So they started out with growth 50 stores, and they went to 100, and now they're at 250. So when you ask about, the malls and stuff, if growth 250 is the right number, then why have any other store but growth 250? That would be my question. And if you do, maybe those stores, which they hinted to today in their earnings call, are smaller stores. right? And they're off mall. They're not on the mall. So we've known that off mall has had better traffic than on mall. So is that where Macy's is headed next? And is it with Backstage, or is it with full price stores, or is it a combination of both? We haven't heard too much on that, but I could see them going in that direction in the future.
Well, that's interesting. And also it pairs back to what you were saying about, do you have a brand that people want to buy? Does Macy's actually have that?
I mean, they have some brands that are really power brands. Like if you think about the INC brand in apparel, that's really popular and that does really well. If you think about Charter Club and Home, that's a brand that has done phenomenally well for them, and especially right now, given the stay-at-home trends, it's probably doing even better. So they do have brands, not that they don't, but remember, the store is 140,000 square foot box or bigger, and not every brand in that box works. So to what extent can you chop that store to be, let's say, 40, 50,000 square foot? Does it work? Does it not work? We haven't seen much of that yet. The only retailer that has been shrinking their store size actively is Kohl's, which is going from 88,000 square feet to some stores, 500 of them, I believe, about 50,000 square feet.
So, Poonam, what's the bellwether name we need to be looking for next in terms of a real temperature check on the retail world?
Most of them have reported, yet to report is Lululemon, which has done spectacularly well over the past few years. And I would expect that trend to continue, especially given the increased demand for activewear, where Lululemon is a key player. I mean, keep in mind, Lululemon, while their sales have grown double digits for many years now, they still are a much smaller company when you look at their revenues than, let's say, a Nike, 15% of Nike's size, if you put it into perspective.
Yeah, no, it's a name that we talk about a lot on this show, and as you say, what a juggernaut that has been. All right, Poonam Goel, thank you so much. Great context on Macy's and the broader retail sector. Senior U.S. retail analyst for Bloomberg Intelligence, joining us on the phone.
Well, also,
love me some Lulu.
Next week we have to look to JCPenney because their bankruptcy filing, and that deadline is the 10th. And are you going to be in a position where we're going to have hedge funds own these physical stores? What do you? Then what happens? Then what do you do? I mean, this was a fear in the oil and gas sector that you were going to have guys who didn't know how to run an oil and gas rig all of a sudden owning them. So
Somebody tosses you the keys and you're like, what do I do with this? Yeah.
What?
Oh, cool. I have a bunch of real estate at a time when no one's leaving their house.
And it's a lot of real estate.
It is a lot of real estate. All right. Yeah, definitely something to keep an eye on. Coming up, it's that time.
Oh boy.
Chart of the day.
Shooting to the moon. Tesla goes
Shooting
far.
to the moon. Baby, you can drive my car. Nice. Who knows? Who knows what's ahead? We're going to find out from Dave Wilson in just a minute. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, it's that time. Chart of the day, song of the day. It's your favorite time of the day, Alex Steele.
I'm ready. I'm ready.
I know.
And extra coffee.
You seem ready. You seem excited, confident. We'll see what happens. All right, let's get to Charlie Pellet first for an update on the trade. Hey, Charlie.
Well, hello there. We got 28 minutes to go ahead of the closing bell. Let's begin with the Beige Book report. Federal Reserve says the U.S. economy did show signs of progress, but continued to struggle amid the ongoing coronavirus pandemic. In its report, the Fed said, quote, economic activity increased along most districts, but gains were generally modest, and activity remained well below levels prior to the COVID-19 pandemic. Equities higher today as the nearly relentless rally in risk assets continued, but with a twist, tech shares are underperforming. Here's where we stand now ahead of the closing bell. We've got NASDAQ up 103 points, a gain of 0.9%. S&P's up 51, a record there, up 1.5%. The Dow surging 434 points, also up by 1.5%. 10-year yield 0.65%. Gold down 1.4%, tumbling $27 the ounce to $19.42. And West Texas Intermediate crude down 3.2%, $41.41 a barrel on West Texas Intermediate crude. Payroll provider ADP reports businesses added 428,000 jobs in August, a step in the right direction, but less than Wall Street's forecasts. Uniforms have become collateral damage as industries including hotels, airlines, and education struggle to recover from the coronavirus pandemic. Sales of such attire fell 43% last quarter for one of the uniform industry's biggest provider, Land's End, even as the retailer reported strong results across the rest of its business. Land's End, which provides a lot of those uniforms, down by 3.3%. 3:33 on Wall Street. That means it's time now for the small business report. Here's John Tucker.
New Jersey restaurants can reopen for indoor dining this Friday at 25% capacity. It's welcome news to Mike Mulligan. He's director of Rails Steakhouse in Towako, New Jersey. Now, we first touched base with Mike back in April when the pandemic had limited the restaurant then to takeout only, and Mike rejoins us now. It is a step in the right direction.
Well, the reduced capacity, unfortunately for a number of restaurants, 25% isn't really going to be able for them to pay the bills. It helps, certainly. I would have liked a little bit more time and a little bit more forward guidance on when they were going to open, because all of a sudden we have to be able to go out and staff and prepare food and train people, which will get done, but it would have been nice to have a little bit more notice on that.
Do you have to have a certain capacity overall for the restaurant before it becomes even profitable?
Well, John, that's a great question, but again, it goes back to the actual size of the restaurant and what the occupancy is. Rails Steakhouse can seat 800 plus inside, and we have the space to socially distance, so we'll be able to accommodate a good number of people on the inside. Restaurants who don't have the space aren't going to be able to, and 25% just really won't be worth it for them to open.
I wonder, is it still going to be fun for customers?
I think so. A lot of our guests who have come and dined with us outside, can't wait to come back in and experience the restaurant inside. It is a totally different experience.
Okay, Mike, thanks. Mike Mulligan, director of Rail Steakhouse in Towako, New Jersey. That's the Bloomberg Small Business Report.
And we thank you, John Tucker. This headline from the Bloomberg Professional Service: Robinhood facing an SEC probe over high-speed trader deals. This according to Dow Jones. Recapping, equities move higher. S&P 500 index up 53 now, up 1.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio. Oh, well
yeah, I didn't see
done.
that.
Yep.
Yeah.
I like
The
it.
only reason I came up with it is that I stuck electricity lyrics into Google, and this is what came up.
There you go.
That's better than I did. I Googled like a bird musical theater. By the way, that doesn't do it.
Yep. Didn't get that. But I like the connection to Tesla.
Yeah, that was smart
Absolutely.
for the win.
I mean, you talk about a stock that's been flying, and it's all about electricity in a sense because, of course, their main business is electric cars. You know, they do rooftop solar as well. That's certainly electricity. Put it all together, and what does it get you? I mean, that's sort of the question the chart tries to answer. I mean, I've seen sort of variations over time. Tesla's bigger than General Motors and Ford and Fiat Chrysler altogether, etc. So what I did to really kind of bring things into perspective is, you know, as of Monday, when Tesla peaked before the declines we saw the last 2 days, look at the company's market value relative to the value of its auto industry peers in the U.S., in Western Europe, and in Japan. And in order to find those, I used the MSCI World Automobiles Index, which has 20 companies in it. So you take out Tesla, that's 19. You take out the second biggest company in the index by market value, Toyota Motor, that's 18. And as of Monday, Tesla was within $1 billion and change of the total market value of the other 18 companies combined. We're talking crazy. Let me just run through them real. No, actually, I don't have time. But Ford, GM, certainly part of that. You know, you've got 8 European automakers. You got 8 Japanese automakers, and Tesla was almost the same value as all of them. It just goes to show you how spectacular the move in the stock has been this year. I mean, up almost 6-fold at one point, when almost every automaker besides Tesla in that MSCI World Automobiles Index was lower. I mean, one exception, Ferrari, was up 10%. If you want to know more, folks, send me an email. I get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Price to earnings for Tesla, 939.
Well, that's down from more than 1,000 the other day.
Yeah, so, it's like, it's totally on sale.
Yeah, exactly. It's bargain basement. Pick it up.
Bargain basement Tesla prices.
Yeah, exactly. All right, Dave Wilson, thanks so much. We will check in with you after the close of trading. In the meantime, let's get down to Washington and Nancy Lyons. Hey, Nancy.
Hey, Jason. President Trump has been paying tribute to World War II veterans during a visit to Wilmington, North Carolina. Today marks 75 years since the war ended. He thanked the veterans in the audience.
These brave Americans raced into the fires of hell to vanquish tyranny, dethrone fascism, and defend the American way of life. You've earned the eternal and undying gratitude of all Americans, and that's why I'm here today.
Despite aging veterans in the crowd, very few of the people that were on hand for the event were wearing masks. Trump's rival, Democratic presidential nominee Joe Biden, says he is following the advice of health experts for his trip tomorrow to Kenosha, Wisconsin.
We've worked out a protocol where how I get in the plane, what kind of plane I get on, how it's sanitized, how I engage people.
Biden says he's going to Kenosha in the wake of the police shooting of Jacob Blake to help bring people together and heal. President Trump visited Kenosha yesterday. Chinese diplomats in the U.S. face new limits on travel and meetings in the U.S. Secretary of State Mike Pompeo says the move is to match Chinese restrictions on American diplomats.
Access for our diplomats in China should be reflective of the access that Chinese diplomats in the United States have, and today's steps will move us substantially in that direction.
Under the new rules, senior Chinese diplomats must get approval to visit university campuses or meet with local officials. Also, any Chinese-hosted cultural events outside of consular posts will need approval if the audience is larger than 50 people. Global news 24 hours a day, on air and on Bloomberg. Quick take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks, Nance. Well, this could be a doozy of a deal. A couple names we've heard of, and lots of people have heard of: Blackstone and Global Infrastructure Partners, GIP, making a takeover offer, another takeover offer, we should say, for railroad operator Kansas City Southern. that rail operator has a market value of more than $17 billion, billion with a B.
Wow.
This would be one of the biggest deals that we've seen in a long time, Alex Steele.
Well, tell me, because you talk to private equity guys all the time. I mean, what's their thinking in this market? Like, how would they look at a Kansas City? Is this like a bargain? Is this like we can get better management? What is it?
I think it's some of all of the above to some extent. I think if they can get it for the right price, you know, GIP is one of the biggest, it is the biggest infrastructure investor in the world. Blackstone has gotten increasingly into that business. There's some cash flow associated with this. That is what you usually think about when you think about infrastructure deals, as you know, and GIP has been among the best. You know, clearly we're going to keep moving stuff around. I don't know what the bet is from a macro level in terms of the current economy, but of course, this would be a longer term hold too, so it's maybe a bet on a recovery.
True. But I also find it interesting in terms of just looking at the stock price straight up. I mean, they're above where they were pre-COVID.
Yeah.
So above in February. So that's also really interesting. Normally I would have thought, well, maybe in March that would have made more sense. But it's so interesting to see kind of what that is a play on in particular.
Yeah, so we'll keep an eye on this one for sure. I mean, we do know that money is cheap. We know that to be true. And so
it's going to stay cheap.
Yeah, going to stay cheap. So there is a lot of financing available for a deal like this. So don't bet against Blackstone and GIP in general. And so we'll see if they're able to get this across the line because, as we mentioned, Kansas City Southern has rejected an offer before. So maybe they'll make it worth their while. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We've got the Dow, the S&P, NASDAQ all advancing. Stocks, at least the S&P and NASDAQ, on track for records. Stocks are rallying, helped by 2020's least loved shares. Here's where we stand. S&P 500 index up 59, now up 1.7%, bringing the S&P's 2020 gains to 11%. The Dow's up 502 points now, up 1.75%. NASDAQ higher by 126 points, up 1.1%. 10-year yield 0.65%. Gold down 1.4%, 1942 the ounce. And West Texas Intermediate crude down 2.9%, 41.54 a barrel. So recapping here, we got a rally underway. 12 minutes to go ahead of the close. S&P now up by 60, up 1.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, time for the drive to the close. Back with us, Alan Lance, Director of Research at LanceGlobal.com, President of Allen B. Lance and Associates, joining us on the phone from Toledo, Ohio. Alan, really nice to have you here with Alex and myself. What's going on out in Toledo? What's it like out there?
Well, from a COVID-19 standpoint, we're open and doing well. Michigan's still, struggling, but we started up the hockey here a couple months ago, and we got some Michiganders coming down to use our rinks and what have you. So hopefully the rest of the country opens up and we continue to see, better numbers, from an economic standpoint with these states opening up and getting this COVID-19 behind us.
Yeah, your governor has gotten pretty good reviews, I feel like. Does that track? Do I have that right?
Yeah, definitely. We're one of the first to close, and we're actually one of the big influencers in closing down March Madness because a couple of the Mid-Am teams had some positive test results and what have you, and decided to really make a push to end the March Madness, which is a $1 billion decision there. So Ohio is in the forefront of that at least.
So moving to markets, you take a look at what we're looking at for Dow is up almost 2 percentage points, S&P up 1.6, NASDAQ up by 1, reversing earlier losses. Are you buying into this continued melt-up rally?
Alex, what we're doing is we're participating in the market. I still like tech. We're just not chasing. These high flyers like Tesla. I'd rather buy tertiary, companies that can benefit from EV, but not actually chase, Tesla, over $500 a share. And I think there's opportunity. The interesting thing is when there was good news on the vaccine front, tech went down because they're thinking, not that much stay at home, and we'll get the physical stores open, et cetera. But I think people are realizing that even with a vaccine, if it comes by year-end, Alex, it's going to be a situation where it's going to take a long time to distribute and really get to a point where we're back to normal. And because of that, I think that's why you're seeing today, like even the utilities that we're buying getting more defensive in the past month are up over 3%, and yet tech is up as well. So you don't see this dichotomy of the defensive issues moving up when tech is moving down, and you're seeing a broad-based advancement, which I think is good. But we're being more on the conservative side. We're not chasing these high flyers and rather participate in other ways.
So one of the other reasons we think a lot about Ohio is because it tends to be pretty pivotal in presidential elections, as you well know. How do you factor the election in here at this point, Alan?
We actually bought this summer some companies, real asset companies, more inflation hedges, and even like a Constellation Brands when it was trading on the lower half of its range, as more of a play in case you get more of a Democratic swing, whether it's in the Senate or White House or both, and I think that's a good strategy. I think planning here the rest of the year on the tax aspect and also on strategy on what to own is going to be as critical as anything. And low interest rate environment, and the Fed last week talking about how it's going to stay low for possibly another entire presidential cycle, I think is bodes well for this rush of money going into stocks, but you always have to be careful when you get a flood of money in, and people aren't looking at valuations as much as just owning the investment, because there's very little alternatives.
So when you take a look at tech, you mentioned you still like it. There has been a lot written in the last couple days about how hedging and options and gamma is all leading to the rally in stocks, meaning that if I'm an investor and I want to go buy 1 million shares of Tesla, and if I'm Goldman Sachs, I have to hedge that, and then that creates sort of upward momentum and upward pressure on all of this for the options market, I should say. Do you buy into that, or do you think that this is like a real fundamental, sustainable rally here?
Well, I don't know how fundamental it is, Alex. I think it's a real rally. I mean, there is a incredible amount of money on the sidelines, and that is coming into the forefront and into equity. So it is a real rally. But it gets to a point where if you get the momentum and you get these hedges, people feel more comfortable to put more and more money in without understanding the risk, and they're the higher it goes up, I think the more chance you have of a pullback that could be substantial, and that's why I don't think your listeners want to chase the high flyers, and if anything, if you're over concentrated in those issues, maybe reduce those positions and look at items that haven't moved. I mean, the Russell 2000 has really performed as well as some of these high flyers. I mean, it's amazing to me what some of these small companies have done. You look at a Tupperware, it was $1 a share, and it's over 20 now. To me, it's starting to show signs of exuberance and just this theme investing where stay at home, etc. And with what's going on with Robinhood and more novice investors getting in, I think that trend might push it higher. But it's more of a time to be concerned and really look at the fundamentals instead of just looking at how much money you made and the momentum aspect of it.
All right, good advice as always. Thank you so much, Alan Lance, Director of Research at LanceGlobal.com, President of Allen B. Lance & Associates, joining us on the phone from Toledo. The Robinhood effect and that sort of stay-at-home theme. I mean, we certainly have seen that, and we were talking about it yesterday when it comes to Zoom, and I think there's a lot of enthusiasm there. One could say some of it's warranted, given how much they've been able to penetrate that, how much of our behavior has changed, but you do tend to see people looking around and saying, all right, what fits this theme?
I know, but whenever I feel like we turn to gamma as a way to explain a rally, I don't know. It always worries me because I'm like, are we that skeptical of the rally here, guys? Or are we past this gamma thing? Guess not.
What does gamma ultimately mean?
So it basically just means that if I'm an investor and I'm going to have a call option on a stock, the broker has to go and buy the stock.
Yeah.
So in essence, to hedge themselves, and so that just leads to this feedback loop.
It has this looping effect that I mean, and certainly we're seeing a lot of those looping effects. It feels like going back to that retail theme that we've been talking about.
Sounds cooler if you just say gamma.
Just say gamma.
And just pretend you know what you're talking about.
Yeah. Battlestar Galactica and whatnot. In any case, we're getting to the close. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as the NYSE honors the 75th anniversary of the end of World War II. We're also awaiting the latest numbers out of Cloudera, CrowdStrike, and PVH Corp. An up day, not just an up day, but a record-setting day again for both the S&P 500 index and the NASDAQ Composite Index. Let's get right to the numbers. I'll give you the why in a moment. The Dow surged 452 points, up 1.6%, closing back above 29,000 at 29,098, bringing its year-to-date gain now to 2%. S&P up 53 points today at a record 3580, up 1.5%. Its year-to-date gain now 10.83%. NASDAQ surged another 116 points, closing above 12,000 at 12,056, up today by 1%. In the year-to-date column now, NASDAQ is up by 34.4%. 10-year yield 0.64%, up 630 seconds. Gold down 1.4%, 1942 the ounce. And West Texas Intermediate crude retreated 2.8% at 41.58 for a barrel of West Texas Intermediate crude. So an update across the board on Wall Street. Alan Lance is research director at lanceglobal.com. He was our guest moments ago right here on Bloomberg Business Week.
When there was good news on the vaccine front, tech went down because they were thinking, oh, not that much stay at home, and we'll get the physical stores open, et cetera. But I think people are realizing that even with a vaccine, if it comes by year-end, it's going to be a situation where it's going to take a long time to distribute and really get to a point where we're back to normal.
Investors searching for any hints that a retail recovery is underway got a glimmer of hope this morning with struggling department store operator Macy's inching back to normalcy. It is still losing money as sales remain well below pre-pandemic levels, but its CEO says demand is picking up across all of its brands. Macy's shares up today by 0.6%. S&P up 1.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Stiffy, you got some moves.
And I'm moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week. Movers and Shakers with Carol Mazur and Jason Kelly on Bloomberg Radio.
All right, time to do some moving and shaking, break down what we saw on the market today. Let's take a little bit of a closer look, Alex Steele, at the S&P. It was definitely a winning day, to say the least. The winners, 463 stocks up. The losers, the stocks down, only 40, unchanged. Two names on the losing side. I'm going to kick it to you. A lot of energy. I mean, you're 1, 2, 3, 4 worst performing names. Yeah, all 4 of the worst performing names, all in the energy patch.
I mean,
what's going on?
For overall S&P, it was definitely a melt up into the close, but energy was like a melt down. So I think a big part of that was you got these oil inventory numbers out, and the headline number looked particularly bullish. But if you dig beneath it, refineries just really weren't working that hard. There was negative utilization, and there's certain areas that had huge stock builds. You're also entering the fall, which is when you get refiner maintenance. So they shut down so they can literally switch their gears into processing different products, and that's going to add to a buildup. So it was just an ugly, ugly day in the oil patch for that. More of a supply story, I think, more than a demand story. Plus, if you got, the regional breakdowns, you got COVID things popping up here and there, it's all going to impact your driving.
You're super smart about energy. Just going to say it.
Thanks, man. You're super smart about sports, so tell me about DraftKings.
Hey, I see what you did there. DraftKings, I tell you, I made this joke earlier on our Bloomberg Business of Sports taping. Michael Jordan, it's like, didn't hear from that guy for a while. Like, he was doing some gambling and, like, hanging out. And then here comes The Last Dance over the summer. It was, like, the must-see of the pandemic. And all of a sudden, the dude's everywhere. He's, like, negotiating the settlement between the players and the owners when it comes to ending the strike in the NBA.
Mm-hmm.
And today, moving a stock in a big way because DraftKings, he is making an investment and becoming a special advisor and, getting that guy involved. What's that worth? Well, it's worth an 8% gain in DraftKings stock, up almost $3 a share. So, people want that guy involved in their business.
Yeah, and other companies like this guy involved, Bailey Gifford. So, and I say that because basically Bailey Gifford is a holder of Tesla, but cut his stake from about 7.67% to 4.25%. And part of that is just, they need to restrict the weight of a single stock in client portfolios. Fair enough. But it does show how sensitive Tesla's going to be to, say, any inclusion into the S&P. If you move 7% on just this one headline of exclusion, what happens when you're included?
I know. I'm glad you mentioned that because that is something where it feels like even these rabid Tesla bulls are a little bit aware. There's a little bit of awareness there that maybe this thing has run up quite a bit. I mean, what Dave Wilson was saying earlier in the chart of the day about how many automakers, it's literally almost 24 that you have to lump together to get to the market cap of Tesla. That's unbelievable.
Yeah, but only if you're going to value it as a car company and not a battery company.
Yeah, true.
Battery storage, totally different value proposition.
Yeah, I mean, and certainly that's part of the bull's case, but man, it is, it's had quite a run. But as you say, Bailey Gifford, basically saying, look, we're still going to be a long-term holder, but we're going to pare this down just a little bit. That was enough to take Tesla down by, just as you said, 5.8%.
Yeah.
So not insignificant, to say the least.
Not
all
at
right.
all.
Let's take a look at volatility. The VIX, got to think that it was not a huge move, just up a touch, 1.8%, closing at 26.60. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey,
Mr. Wilson, gently correcting me. I appreciate that. Dozen and a half. It was 18, right? 18
right.
stocks it takes? All right. Yeah, I got a little overzealous there.
It's okay, Jason. Let's talk stock of the day, shall
Let's
we?
do it.
Go.
I love it.
It's a provider of in-flight wireless service on Alaska, Delta, and United Airlines, as well as Air Canada. The company also provides service on business jets. Remember that. It's important. It'll come up again in a moment. GoGo was founded in 1991 and went public in 2013. The ticker is its name, GOGO. Company shares set a record in December 2013 and then worked their way lower as losses mounted at the company. This past May, they traded a record low of $1.33. Now, today, GoGo rallied back above $10, and most of the rebound occurred the past 2 days thanks to a deal. The company agreed to sell its commercial jet unit to the satellite communications company Intelsat for $400 million. While Intelsat's in Chapter 11 bankruptcy, the deal received court approval late Monday. GoGo will be left with a business jet service, which generated more than half of its second quarter revenue. The company will have what an analyst at William Blair called a completely different competitive and economic profile in a report. That prospect went over well. GoGo climbed yesterday by more than 43%. That was the stock's largest gain ever. Today, it was up another 28.5%. You put that together, you're talking about a gain for GoGo of almost 84.5%, by far the biggest ever for the stock.
Interesting. I have to say, not a huge GoGo fan. I feel like
don't even get me started.
It doesn't work that well.
Yeah, I was going to say, because it doesn't work.
So, I don't know if
you keep buying it, and you're like, are you connected?
Exactly. I just want to check.
Flying on business jets, it's going to be Intelsat's problem now.
Yeah, exactly. Yeah. Well, I mean,
also, I'm not flying, so
when Alex hops on her PJ and she's like, "Listen, this better work."
Right. Yeah. Say less, Jason. Say less.
Exactly. All right. You're listening to Bloomberg Businessweek. Dave Wilson, thank you so much. Let's get over to Mark Mills now. He's got your World National headlines. Hey, Mark.
Hello, Jason and Alex. President Donald Trump visited Wilmington, North Carolina today,
redesignated the city as the first American World War II heritage city in honor of Wilmington's role as a major shipbuilding site during World War II. North Carolina is seen as a battleground state, but Trump was feeling very confident.
So we won a big race in 2016, and they say the enthusiasm right now is far greater than even 2016. I have to say this is the most important election in the history of our country. I really believe that.
The Commission on Presidential Debates announced the lineup for 3 presidential debates this fall. Each forum will have a single moderator who is solely responsible for selecting the questions. Fox News anchor Chris Wallace will moderate the first debate in Cleveland, September 29th. C-SPAN Steve Scully and NBC White House correspondent Kristen Welker will host the second and third debates October 15th and 22nd. USA Today's Susan Page will moderate the vice presidential debate October 7th. Democratic presidential candidate Joe Biden would like to see immediate fact-checking during the debates.
I think that would make a great, great debate if everything both of us said was instantly fact-checked.
Looking ahead to Labor Day weekend, White House Coronavirus Task Force Coordinator Dr. Deborah Birx said neighborhood gatherings like barbecues in the backyard have become a primary source of the virus's spread.
When I say socially distance, it means at all times, including with family members that you may not have seen for a few weeks, including with the neighbors down the street.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you on a Wednesday afternoon. So Phil Murphy, the governor of the great state of New Jersey, he's been talking about this trade tax. We talked about it earlier in the week, Alex, essentially saying these data farms, these so-called data farms where stock trades are processed, high-speed stock trades are processed. He wants to slap a tax on them because, you know, a little bit of a, almost like a little toll for going through New Jersey. Well, now he's saying that that could fund what he is purporting to be a big social justice agenda. Interesting to sort of tie it directly one to the other, and this notion of like, oh, well, Wall Street, they've got a lot of money. I need money to pay for things. Let's put those things together.
Yeah,
I like it.
Let's do that. And this is according to some senior administration officials. Also, I was interested in that the administration is looking to borrow about $4 billion to cover the pandemic-related revenue gaps, right? And they're going to institute a millionaire's tax for the fiscal year that starts in October. And then this electronic trading tax could be for the future budgets in order then to fund that social justice agenda. But nothing greater than setting up the have and have-nots, as you just pointed out.
Yeah, exactly. I mean, politically and rhetorically, this makes a lot of sense. I mean, in the sense that it's hard to imagine that a lot of people, if you said, we got to learn how to, or we got to figure out how to pay for some things to help people. You know who can pay for it? Those fat cats who are making a lot of money. I mean, it tends to be a pretty good applause line, I would imagine, for Governor Phil Murphy.
Yeah.
Just saying. Maybe I'm a little cynical.
No surprise, SIBO, not a fan.
Yeah.
By the way, it's irreparable harm to the U.S. capital markets. That's the line from SIBO.
Yeah, it sort of reminds me of when the private equity guys, you know, complain about the potential change in the carried interest taxes. It's like, this will destroy the entire business. It's like, or maybe you're just going to figure out a way to otherwise make money. There's also that. Go figure. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, and after the bell earnings beat out of Cloudera, second quarter revenue $214.3 million, estimates there $208.1 million. Shares, however, are trading lower after hours, down now by just about 1%. Costco's reporting August total comparable sales up 13.2%. Estimates were for a gain at Costco of 10.4%. Another day of records on Wall Street with the Dow, the S&P, and NASDAQ all advancing. The nearly relentless rally in risk assets continues. Tech shares, though, underperformed. Today we saw the NASDAQ Composite Index, yes, a record, up by 1%, up 116 points, closing at 12,056. By comparison, the S&P was up 1.5%, rallying 54 points. The Dow up 1.6% today. The Dow up 454 points, ending today's session at 29,100. 10-year yield 0.64%. Gold down 1.4%, 1942 the ounce. And West Texas Intermediate crude down 2.6%, 41.64 a barrel. Recapping, stocks push higher. S&P at another record, up 54, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, let's get back to the latest edition of Bloomberg Business Week. It's a double issue. It's all about the upcoming election, and I have to say, not something that we necessarily thought at the beginning of the year we'd be talking about in the election issue, and that is the post office. So much has changed. Devin Leonard, projects and investigations reporter for Bloomberg Business Week. He joins us on the phone. And back with us is Joel Weber, a double shot of Joel Weber today, the editor of Bloomberg Business Week. So, Joel, I have to say, you got to talk about the post office in an election issue, right?
Yeah, and there's sort of like one of the best parts about my job is that I can kind of like look out over the kingdom and be like, who do we have for that?
Yeah.
And Devin is like by far the number one person that you want talking about this because he's written a book about the post office. That's Devin Leonard, of course. And so we got him loose on this, and here we are. We've been dealing with postal delays for weeks and months now, and now the election's upon us, and so everyone's deeply concerned about what role the USPS will have in it. If Louis DeJoy, who's the Postmaster General, who made a number of changes, if those changes might have deep, lasting effects. So we sort of let Devin loose on this, and I think what he really came back with was, the election, probably something the Postal Service can handle, but we're going to see a dramatically different Postal Service on the other side. Devin, can you walk us through what we might see in store for the Postal Service?
Well, yeah, I mean, so in June, Louis DeJoy, he's the former CEO of New Breed Logistics. It's a logistics company that it was his father's company. He kind of built it up and sold it to XPO Logistics. But anyway, he's a guy with lots of experience in transporting stuff, including a lot of equipment for the United States Postal Service. But he's also a big contributor to the president. And in the last 50 years, the Postal Service, which used to be sort of a very patronage ridden, sort of problematic, troubled institution, they stopped putting people, in as Postmaster General, who were too retired to the president. Anyway, so now we have a guy with ties to Trump. He's also sort of a very aggressive, private sector guy. And basically what he's come in and tried to sort of apply some of those principles to the Postal Service, among other things, trying to get the trucks to run on time, even if they leave without mail, and that's caused all these delays. And I think that's just the beginning of sort of his plan, and which we're really going to see, like you were saying, until after the election. So until we get to after the election, which I don't really know when that's going to be. Like, I know technically it's November 4th, right. But like, I genuinely don't know if that's true. But before that, so lead up to the election, is he doing stuff to help mail-in voting? Well, I think what you're asking me about, Alex, is all the things you're reading about. I guess what sounds an awful lot like a conspiracy to to sort of disrupt or hinder, mail-in voting, and that's the removal of, sorting machines from processing plants, the disappearance of, blue collection boxes, and then some letters that the Postal Service has sent to 48 states saying, hey, we don't know if we can guarantee on-time delivery of ballots. The thing is that all that stuff started before DeJoy came in. So, the mail starts getting delayed, and then everybody starts looking at this other stuff that's going on, and they think that's all coming from him, but it's not. Basically, they've had big declines in mail, so there's been an ongoing process of reducing the number of sorting machines, reducing the number of blue collection boxes. At the same time, there's a big concern at the Postal Service that all these different states have these, in some cases like Montana, lets people request ballots a day before the election. And, basically they were sending out a letter saying, we don't know, if that's what you're going to allow citizens to do, then that could be a big problem. So, basically the Postal Service says, and all the union heads, by the way, who have been complaining, bitterly about some of this, they're saying, no, we can handle the election. Right. That's not the issue. It's the volume, I guess, from mid-September to election day, it's going to be 2% of their overall volume. This is, the Postal Service delivers 433 million pieces of mail a day. So you have to put that in context.
Yeah, it is interesting. And as we said at the top, we did not expect that this was going to be the big issue between the controversy around the Postmaster General and the controversy around the pandemic and the aftermath of that. The world is changed. Devin Leonard, a terrific story, a must-read in this latest edition of Bloomberg Business Week. Catch it on newsstands, but before you do, you can see it on the Bloomberg terminal and at Bloomberg.com. Our thanks to Devin, as well as to Joel Weber, the editor of Bloomberg Business Week. Well, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues right here. If you're listening on 99.1 in D.C., Sound On with Kevin Cirilli. That is coming up next. Here, Alex Steele and I, we're going to be talking a little bit about the real estate landscape in and around New York. We talk about it all the time. It's ever-changing and not looking good for Manhattan at the moment. I
literally every day on Zillow, it's like price drop, 60,000, price drop, 95,000, price drop, 200,000 for apartments.
It's pretty amazing.
Yeah.
Pretty amazing. All right. You're listening to Bloomberg Business Week. All that is ahead. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to talk about one of our favorite topics. We know you want to hear about it too. Talking about New York real estate. Get an update on what's going on. Not good in Manhattan, pretty good elsewhere in the tri-state area. We'll dig into that in just a second. Let's dig into the headlines first with Charlie Pellet. Hey, Charlie.
Hi, thank you very much. Here's what's going on. In fact, lots going on after the closing bell. A couple of earnings reports to pass along. CrowdStrike, a cybersecurity platform, reported revenue for the second quarter that beat the highest analyst estimate. Second quarter revenue, $199 million. Estimates, $188.7 million. It does see third quarter revenue in the range of $210.6 to $215 million. Estimates, $196 million. Shares of CrowdStrike after hours are trading lower now, down by about 4.5%. Also reporting after the bell, Cloudera, its shares down by 1%. What a day on Wall Street, another day of records. Great reason to keep it locked into Bloomberg Radio. Equities continued the relentless rally in risk assets, but in a twist, tech shares underperformed. S&P 500 index up the most in almost 2 months to a record. S&P climbing today by 54 points, up 1.5%. The Dow up 454, up 1.6%. NASDAQ at a record, closing above 12,000, up 116 points, up today by 1%. NASDAQ, by the way, now at 12,056. 10-year up 7/32 with a yield of 0.64%. Gold down 1.3%, 19.44 the ounce. And West Texas Intermediate crude lower today by 2.8%. Well, as for the market backdrop, Katrina Dudley is portfolio manager at Franklin Mutual Advisors.
Well, I think that the market is reflecting some optimism that we have that, as an entire society, we will be able to bring research together and get a vaccine candidate fairly quickly through the approval process. And once we have a vaccine candidate that works with strong efficacy, we're very positive that this market really reflects, the ability of the economy to bounce back.
United Airlines Holdings will eliminate 16,000 jobs next month as the carrier shrinks operations in response to the steep decline for air travel demand amid the COVID-19 pandemic. Shares of UAL up today by 2.4%. American Airlines Group advanced 1%. Delta, based in Atlanta, up 1.4%. Southwest rounding out the big four, up today by 3.3%. Recapping, equities advance. S&P, NASDAQ at records. S&P up 54, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, a Wednesday edition, and want to know what Bloomberg clients like to read about? It's real estate, and especially residential real estate. And our expert on that is Oshrat Carmiel. She joins us on the phone from New York City. Oshrat, a great story as always. New York homebuyers searching everywhere but Manhattan. We had sort of a sense that it was happening, but this is real. Tell us what you found.
Well, basically, it's kind of, as you said it. I mean, Manhattan has become the least. Anybody who's searching for a home in the New York City area, Manhattan it seems to be the last choice. I mean, sales have just, sales have been tripling in Greenwich. They're up like by 50% in Westchester, Long Island, the Hamptons, even Brooklyn. But Manhattan, they're just down, and they've been down. These are contracts, so these are actual. These are not closed sales. These are actual contracts that people were signing in August. So it's really a reflection of what people are thinking right now. And Manhattan just continues to be down. It's not many takers.
What does history tell us about this? How much of an anomaly is this, Oshrat?
Well, it's unusual, right? Because I think even in the past recession, I think people saw an opportunity to buy in Manhattan. They said, okay, well, things are cheap. We'll buy in Manhattan. I mean, you have the core center city. You had people working here. But all that's not happening right now. I mean, I think, you have workers who are untethered from their office. So the priority of living near the office gone. Schools, many aren't open, so that there's less of a priority there. People who are staying in the city might be looking further out in Brooklyn to maybe get more space for less money if you're going to be forming a pod or learning from home. So the appeal of Manhattan as a place to buy right now, it just seems to be pale compared to the suburbs. But that's a snapshot of right now, reflecting on what's happening.
And as you look at the various suburbs, I mean, I'm talking to you from Westchester, and certainly, as you say, prices have gone up here. We hear all the stories about bidding wars and all that, which takes us back, 10, 15 years for the last time we really saw that in earnest. Are there hotter spots than others? You mentioned Greenwich, and that seems to be on fire as well.
Yeah, I mean, I think it really goes back to that original point. It's hot everywhere but Manhattan.
Yeah.
And, because I feel like when you're talking back to the boom time in the early 2000s, you saw bidding wars in Greenwich, but you saw them in Manhattan too, right?
Yeah.
It was everywhere. There was no one, hole in the donut that was exempt. But you're seeing, I mean, I think, if you look at the numbers, basically, I mean, there was a tripling of contracts in Greenwich, contracts up 57% in Westchester. They were up I think 30 or 40% in Long Island. Hamptons were also just single-family homes. I think it was close to triple what were signed. This is usually not a Hamptons time to buy. You usually buy kind of sometime over the winter for the summer. So it's really just everywhere but Manhattan.
Do you feel like it's a permanent thing, or I'm just going to go rent this for the next 12 months thing?
Well, these are all sales, so these are people who are buying, and the data doesn't tell us whether people are buying to move out of Manhattan, whether people are buying this as a second home while still renting as Manhattan and kind of playing both sides. But right now, the appeal of Manhattan, restaurants, Broadway, your office, schools, it's all closed. So I think there's becoming just less of a premium, but obviously we know that they're going to open at some point, right? So I would imagine that the appeal will return. But if you're looking for a deal, that's probably where the deals are or eventually will be.
Oshrat, does anybody say, you know what, we needed a little bit of a correction in Manhattan real estate, so maybe this is just a bit of a reset?
It could be. I mean, and that takes a while, however, because right now you're seeing contracts are down, listings are piling up in Manhattan. But as we saw from the last correction, it takes a while for that dance to happen, where sellers realize, wait, we have to start dropping prices. So there probably will be a reset, but that takes a while. Yeah. But the wild card becomes, if things start to open up, maybe the correction isn't going to need to be as bad as you think right now.
Yeah, it snaps back. Well, certainly that is one case that's being made by Manhattan bulls. All right, Oshrat Carmiel, thank you so much. Real estate reporter for Bloomberg, joining us on the phone. And don't count New York City out.
Never, but I do have to point out that in a lot of the apartments I've just been browsing on Zillow, and they've been dropping the prices. They're dangerously close, if not sitting at the last selling price. So I'm really wondering how much these sellers are willing to go under, how motivated are these actual sellers?
Yeah, that's a really good point. And what the economy does from here will probably, as Oshrat alluded to, determine how much people are willing to just sort of suck it up and get out. So we'll see. All right, let's go to Mark Mills now, get some world and national headlines. Hey, Mark.
Hey, Jason, the CDC has told states to prepare for a COVID-19 vaccine to be ready by November 1st and asked them to remove any obstacles that would prevent distribution sites from opening by then. The date suggests the federal government is preparing for a vaccine to become available just days before President Trump stands for re-election November 3rd. U.S. infectious disease experts say the coming long holiday weekend may lead to a surge in COVID-19 cases.
We are seeing that crowded neighborhood events, including backyard barbecues, are currently one of the primary spreaders of virus.
That's White House Coronavirus Task Force Coordinator Dr. Deborah Birx. Democrats are trying to prepare the country for an unusual presidential election with millions more people voting by mail than ever before. Polling shows Democrats more likely to vote by mail than Republicans. Democratic Senator Chris Coons of Delaware says the country should not expect the typical election night results.
On election night, Donald Trump may initially show a significant positive result that will only be addressed over several days as mail-in ballots get counted.
Senate Majority Leader Mitch McConnell expressed doubts about whether Congress can get a deal on another pandemic relief package when lawmakers return to Washington after a month-long recess, despite the Trump administration push for a quick, targeted stimulus. McConnell says the talks between top administration officials and House Speaker Nancy Pelosi have not been fruitful. And Britain's Prince Harry and his wife The former Meghan Markle have signed a wide-ranging deal with Netflix to produce programming for the streaming service. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
Mark, thanks so much. You are listening to Bloomberg Business Week. Meghan Markle, the former Prince Harry, or I guess he's still Prince Harry, Netflix deal, checks out.
Yeah, but like, do you have to sign like a a confidentiality agreement or something?
Yeah, but who's to say what they're going to put on the air?
No,
you know what I mean?
That's true. It could be best superhero. Totally fair.
Yeah, totally. Yeah. So we'll see what happens there. So meanwhile, we're talking a little bit about real estate, and one of the juggernauts in the broader real estate arena has been Airbnb. They're teed up to go public, and apparently Bill Ackman, he's got a blank check company because like everybody's got a blank check company. You and I are going to start a blank check company that's
cool
like
kids
Broadway
are doing that
songs.
now.
Yeah. So apparently he made a run at Airbnb, and they're like, no, we're good, bro.
I mean, you have to think, like, why would Airbnb want to do it that way? Like, why wouldn't they want the traditional IPO, considering that they'll probably be able to raise so much more money?
Yeah.
But then again, you have to pay less fees when you do it through a SPAC.
Right.
So, I mean...
Worked out for DraftKings, which we were talking about earlier. They were probably one of the most successful. I was talking to an investor earlier who was saying, a bunch of the blank check companies are trading below their IPO price, but that's just because they haven't done deals yet. I mean, I think part of it is choosing who you want to be in business with.
Also
and
true.
Listen, Bill Ackman is a very smart guy. He's been a very successful investor, but it could be that Airbnb is like, you know what, we got this. We don't really need your help to a large extent. But it does show you, I think, the scope of Bill Ackman's ambition here. In the sense that he's not just looking to buy some little old company and like sort of see what we can do. He's going for it.
Yeah, and they said, and he said when it went, he wants a mature unicorn.
Yeah.
Which is kind of funny because the whole point of a unicorn is whatever. Anyway.
It's like a unicorn with like some gray in its mane.
Yeah, exactly. So basically like a company that's still a moonshot, but not really a moonshot.
But not really, but like a cool moonshot that's like been around for a bit. Yeah. In any case. Good luck, Bill. See ya.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Biggest gain for the S&P 500 index in 2 months. S&P surging today. Some of this year's least loved shares helping fuel the rally. S&P at a record, picking up 54 points to 3580, up 1.5%. The Dow up 458 points today, up by 1.6%. Nasdaq surged 116 points, up today by 1%. The 10-year, the yield 0.64%, up 6/32. Gold down 1.4%, 1942 the ounce. And West Texas Intermediate crude oil today down 2.7%, 41.60 a barrel. Recapping, stocks finished the Wednesday session at a record. Second trading day of September, S&P up 54, up 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you on a Wednesday afternoon. You know, and it's interesting, Alex, we're going to talk a little bit about broadband, and it takes me back actually to the conversation that we had with Devin Leonard about the Postal Service and sort of rural versus urban areas and access and how important that is when you think about all aspects of life. Robert Bell is the co-founder of Intelligent Community Forum. He joins us on the phone. So talk to us about broadband, Robert, because I feel like this is, it underpins everything that we do at this point. And we've been talking about it for a while, sort of how we really get that broad access to broadband.
Well, it's a pleasure to be with you, Jason. Thank you. To me, it's kind of interesting that it took a global pandemic for the argument over whether everybody needs broadband to kind of come to a crashing halt. As of 2015, according to some research by a colleague of mine, Roberto Gallardo at the Purdue Center for Regional Development, there's still 31 million Americans without broadband access at 25 up and 25 down and 3 up in terms of megabits, which is that's a really slow service these days. 31 million Americans, 10% of the population. And so now in the middle of a COVID where everything we're discovering runs on digital circuits, what an impact.
So is the problem to not getting broadband to everyone, is it infrastructure? What's the issue?
Telecom in the United States has always been a private sector business, of course, right? And we're all used to that. So we tend to then constantly focus on, well, what does it cost to have networks? And we have tremendous debates over, should the government be spending money on this as opposed to the private sector? And it's kind of time for that debate to be over. I mean, we decided a long time ago there's certain utilities that every place has to have, electricity, basic telephone service, clean water. We still don't have good sanitation everywhere, but we're pretty close. This is the next one, and it's never been revealed so starkly how important it is as it has been today.
Well, and I feel like it's revealed especially in conversations that Alex and I have been having around education and access that students just don't have. We're talking about this globally, but here in the United States, there are a whole lot of students who aren't going to be able to be educated, full stop, because of a lack of access to technology. That is super troubling.
Well, and again, COVID shows it because now this is the only way we educate, but schools have been putting their systems online for a very long time for scheduling, assignments, research, teamwork. We've all seen the stories about people having to drive to the local fast food joint so their kids could do their homework. I mean, is that really acceptable to us as a people? It isn't to me.
Can we also talk about the other part of the population that I actually didn't think about until I read these notes, which is the elderly?
Sure. Right. Right now we're discovering that we've created an immense vulnerability by taking our infirm elderly and putting them, close together in these care facilities. And it seemed like a great idea. The trouble is that it creates tremendous risk, as we find out. And in a lot of places, the U.S. is one of them, but other countries are pretty far advanced on us. They're using broadband to help people stay in their homes. One of my favorite examples was something I saw in the Netherlands where an insurance company got together with the city government and helped fund a program where elderly people, mostly female, not surprisingly, would have an online virtual exercise coach and would exercise in their homes. And what made it really work was they built a little gamification into it, so that you'd be competing with your friends, to see who got the best exercise score. And it proved very, very effective. And it was funded by the insurance companies because it's cheaper for them to have people stay in their homes for longer.
So who solves this problem? Who is best positioned to solve this? Because I feel like it's a fight we've been having between public and private, and it depends on the administration, depends on how aggressive the FCC wants to be about it. Who does this rest with, Robert?
I think we're going to find a hybrid solution in the end of the day is going to be our answer, as it has been with so many other things that we do in the state successfully, like, for instance, electric generation, right? So I think it's going to be private companies doing what they do well, but they need to have the investments de-risked, because when you're going to try to roll out service to those 31 million people who are not served, it's going to be really tough to make money from it in the ordinary sense. So they need some kind of financial support from the public sector to help them get past that big capital cost of putting it in. Once it's in, as an entrepreneur said to me, once it's in, if I don't have to pay the capital costs, I can make money on this, no problem. So it's another, yet again, it's another infrastructure question, of course.
So when you talk to different communities sort of about this issue, are they willing to do anything, like sweeten the pot to help their areas get this?
It's all over the map, of course, but the ones that really get it, absolutely. And we actually at ICF have a whole set of specific strategies we recommend to them based upon their appetite for risk. Right? We don't want the government to take too many risks.